Yo, good morning, everybody. Hopefully, y'all are doing well and had a good weekend. So, yeah, let's just get right into it, right? Good morning, Sean. Good morning, Maddie. Am I recording? Appreciate the reminder, bro. It better be recording on YouTube. Little inside joke. But yeah, so I just want to give you guys a reminder. Our whole foundation of how we trade has to do with Power 3 market maker models and defining very particular liquidity pools, right? And we use many different PD arrays, but of course we got fair value gaps, we got, breakers, the breakers and mitigation blocks, along with my razor model that I teach my private group. Those are the main things that I look to enter on. For those that may be wondering, I have 6 models that I use, but I like to use those. So if those resonate with you, right? Or, if you're just trying to see how to apply specific models or just simply learn how to create your own system, all that stuff over time can be discovered by joining us on these live calls. But yeah, and then we walk through bias and narrative on Sundays. So today generally complements what we talked about on Sunday. So it's very important for you guys to be here on Sundays to allow you to get the most out of these calls. Not this week, but next week, we will be doing our marathon. Oh, well, it's not really the second week of July, so maybe not next week either. We'll do not next week, but the week after. I will be going live 4 times. So Sunday, Tuesday, Wednesday, Thursday here on YouTube. But of course, every other week, we do twice a week here on YouTube, and then every single day in my private group. So if you do find interest in what you see us do today, or have found interest over the last 2 years of me being live on YouTube, and you think being part of this type of experience every single day is beneficial to you, you could check the link in the description for our private group, or you could scan the QR code at the top of the screen. But otherwise, let's have a good session. Okay? So yeah, we got news tomorrow. We have news today, 7 a.m. Pacific Standard Time. And then Wednesday, so tomorrow we have Fed Chair speaking. We have PMI, NFP conversation. And then the full NFP announcement comes out on Thursday, and then we have a holiday. So you want to remember, day before, day of, day after a holiday generally is low probability. So you want to be cautious when we get deeper into the week. Because it's NFP week, we got to be, pulled back on our risk. We're not going to be gambling ever. But we're especially not going to bend the rules during NFP week. So we're going to be patient. We're going to be calm. We know that we'll find something, but it may not be at the time you're looking to see it form, right? It may take a little bit longer. It may, start right out the gate and offer an opportunity. So the analysis we're going to do is going to help us determine that, okay? Why is it not? Oh. So yeah, let's take a look at the bonds and yields real quick. So we do got the bonds kind of reaching lower a little bit. Coming back into this little gap I highlighted, right? There was that little itty bitty gap from this high to that low. I said that should be a sensitive level, and up to this point, it has proven to be sensitive. So we got a change in state of delivery on the, weekly chart. So that's significant. But then when you move to the monthly chart, this could really easily just be a retracement to this order block. Okay, to then see price go lower if it was to give up some of these lower levels. If this goes lower, that's going to continue to promote downside on the indices. That's why we're starting here every single week and every day. We want to take a glance at what this is doing, because this asset affects the indices and foreign currencies. Right, we initially wanted to see if we could hold in here and then try to reach up into these buy-side liquidity pools. And with that being the case, if that does continue to hold, which for now it's not showing anything that tells us otherwise, we have this wick in here. We want to see that midpoint get respected. So we'll see if that wants to close above this wick midpoint in there and close above this upper part of this fair value gap. It doesn't have to really come in. I wouldn't expect it to fill in the whole fair value gap. I would mainly be focused on this little piece because, again, we have buy side, sell side in this wick. And then we have displacement that takes us above that high. So this fair value gap, when it gets traded back into, from this level down to that fair value gap low, should end up acting in a balanced price range fashion. So because of that being the case, we wouldn't expect a fair value gap like this to be traded deeply into, unless, we may be wrong, right? And then if this gets down below this fair value gap and inverts it and closes below it, then that would be our trigger to then start seeking shorts. But again, if this just keeps going higher, we may end up seeing the dollar get a little bit weak. I want to still see if we can get it up here. So there is somewhat of a cracking correlation happening. The dollar is looking, the yields are kind of stuck in a range. It is the end of the month, so that's another risk factor for the current condition. They may not want to do anything until NFP week or NFP day, okay, or PMI or any of these news events. We have heavy news, PMI, Fed chair speech, and NFP coming out. So that could stir up the market. Okay, so our expectation this morning is going to be very, very mellow. So yeah, we'll keep tabs on what this is going to do. Again, we got this change in state. So if it's going to be going bullish, we don't want to see it dig too deeply back into this. But we're trapped in between this weekly change in state bullish, which also completed a market maker buy model. This may be affording this to be a market maker buy model as well from this consolidation, accumulation, smart money reversal, first stage distribution, possible second stage distribution may unfold, which is another reason why if we're expecting this to go higher, I wouldn't want to see this traded deeply into, because we have a lot of things coupling with this asset to see it continue to go higher if it chooses to do so. We're just trapped inside of a bearish monthly PD array. So that could cause some issues with a fast-paced market racing through that level, because it is high resistance right there. Okay, it's also consolidation at that level. So they accumulated in these red lines. That is a monthly bearish order block. So if we're bullish and we're trading into a bearish PD array like this monthly bearish order block, you can expect that it's going to, at a minimum, give you a little bit of a pause, a little bit of a slow moment in price, where it may struggle a little bit, but then maybe it sets relative equal highs, or maybe it runs up like it did here, creates a failure swing, turning that high resistance into low resistance. We also have this high and that high, which is now a failure swing. So I wouldn't honestly be too shocked if they look to take this low out, creating the concept I have taught you guys called deferred liquidity, when we trade into a high resistance level. Okay, this is trading into a high resistance level, consolidation, or a stop run, right, that then turns around. We do have a failure swing in here, so again, there is a chance for it not to go too deeply into this. The only way I will determine that this is not going to go higher is if we really start to smash through not only this low, this wick, but then also get down below that fair value gap low. How many PD arrays is that? That would be 3 PD arrays. So ICT has a 3 PD array rule, where if you're in a trade or looking at a bias or a narrative or just a directional move, if 3 PD arrays opposed to that direction get violated, in this case, that would be here, right? If that gets violated, what is it actually? Then we would expect the price is potentially going to look to try to take out things like this, maybe even something like this. That would be a little bit more high resistance because it is a stop run. And then, of course, it may, at that point, end up getting down below here. But that's contingency plan based on what we see currently. The main objective is to see if we can't get price to come up into here. Again, we do have a cracking correlation with the currencies, right, and the indices. Unless, of course, this starts dropping, which would then make this be in line with what is taking place in the bonds, okay? But for now, we're just going to have to keep a light-handed perspective on the bonds and yields, see what it's going to transpire into. Again, it is the end of the month, so they're capping the monthly candle, okay? Normally at the end of the month, it doesn't really have a crazy volatility that accelerates. Until, of course, we have NFP, then that gets pretty volatile. But that's the start of a new month, okay? And then we'll talk about that this Sunday. All right, we'll do a deep quarterly analysis. So make sure that you're here for that as well if you want to get that process, okay? So yeah, that's my perspective here. What I'm watching is this little gap in here, this wick, and this low, along with this change in state of delivery. I want to see this little block of price delivery in here be sensitive if we're going to see price go higher. We are rejecting this wick. So again, if this rejection of this wick does lead to aggressive displacement lower, where we end up inverting this fair value gap, then that would set the stage for us to continue going lower. But for now, we'll worry about that when the time comes. I'm more focused and concerned about this little upper portion of the gap, and then this change in state of delivery, which is a weekly bullish order block. So we want to see how sensitive that's going to be, with the expectation that we may look to try to get up here. Keep tabs on this wick, though, like I said, because this wick could very easily be the catalyst, or part of the catalyst, that ends up pushing price lower or starts that move lower, especially if the yields go higher, bonds go lower. There's talks of a rate hike. So that rate hike is going to directly hike this interest rate. So that is a bullish indication for the yields. If the yields go higher because they end up going through with a rate cut, or a rate hike, my bad, then we'll see this rally. We'll see the bonds do what I just mentioned, take out this fair value gap low. And then that would have a negative effect on this. We would continue to drop in the currencies, right? Targeting even deeper levels, like this down here. And then as a result of that as well, this retracement will then turn into a simple accumulation that turn to distribution, targeting these lows down here, okay? So we have a couple of regular trading hours gaps that are overlapped. You could see how, because of the overlapping effect, price was basically showing consolidation. A little bit of a retracement, right? We came back up into this daily fair value gap. As long as we stay below that, there is still a chance for this to want to keep going lower. So you want to keep tabs on that. We have failure swings down here, right? Lots of trend line liquidity. So if this does start to smash, let's get a feel for what PD arrays are in that area. So we got this gap here. We're absolutely range bound at the moment. So it's a low probability day, and it's the end of the month. It's the last day of the month. If you've had a really good month so far, or even a good week, right? Like you captured something yesterday or something, which we did. We called a beautiful, beautiful move yesterday. And those in my private group can attest to that. It was like 200 points or some craziness in this drop right here. Obviously, we've, now looked at the result, and all that was a wick through into this order block. Well, we didn't really have a 3 drives pattern, but we did have a run here, drop down. We're refusing to break this little piece of the price delivery here, this bullish fair value gap. What the hell just happened? So keep that in mind. Is there volume imbalances in there? There's one right there. Okay. So yeah, we pretty solidly respected that fair value gap with the volume imbalance. Look at the midpoint, beautifully respected. So again, I wouldn't be very surprised if they look to come down, try to tag this. Preferably they really don't do that because we have this here, this fair value gap. But we're stuck in between not only the range bound characteristic, but we also have the daily bearish fair value gap. You see on this daily chart here too, we have the order block right there. So that's coupled with this fair value gap here and a swing low. So again, we want to keep tabs on this. If it does prove that it wants to gravitate back towards equilibrium from this low to that high, which is right there, you know, we may end up just staying stuck. If I'm not mistaken, if you take this low to that high, see how equilibrium on that parent range, how price is just back and forth, back and forth. We may even gravitate back to that equilibrium. I'm gonna actually keep that one in place. But again, we have to watch what the dollar's going to do. We see that here. Make sure I got all my charts up. Yeah, good morning, everybody. If you guys have any questions, let me know. I'm not going to be looking for really anything until 6:30 passes. Well, yeah, and if you guys get value from the content, don't forget to subscribe to the channel and like the video. It helps push us out with the algorithm on YouTube, so we can help more people, right? Because there's not many people that do this stuff every single day at the level we do. And it's all proven. You don't got to take my word for it. I don't encourage you to take my word for anything that I talk about. I encourage you to put it to the test, as you should with everybody you look at, especially if this is something that you want to do for your life. You don't want to listen to idiots that don't know what the hell they're talking about. So yeah, let's take a look at all 3 of the indices real quick. So clearly we got a cracking correlation. We got the S&P and the Nasdaq kind of failing. This is showing the heaviness that's been shown, at least in the short term, from the decline in the Mag 7. So all the tech stocks, essentially, all the big names, they kind of took a nosedive. So it's kind of dragged the market down a little bit. But we see the Dow Industrial, which is industrial stocks versus only tech heavy. They got a little bit of tech, but not as much. So it's not as weighted. It's not as damaging when tech doesn't do very well. So that's pretty much, at least in my opinion, the cause of this cracking correlation. Now maybe we get back in line with the correlation, right? We didn't necessarily hold this bearish order block like I was wanting to see. So we're going to have to observe, because we're inside the potential change in state of delivery here. If we displace through that and get above this daily fair value gap, we'll then have a stop run. We have 1, 2, 3 drives into this bullish order block. Also inside this breaker here, got the high, low, higher, high. So that displacement we got to keep tabs on. This fair value gap is definitely going to be the linchpin. So if we're going to go lower, it's going to have to hold this level. But if we're going to get back in line with bullishness, we'll know that it's time once we close above this, which will change state of delivery overall. We'll also have a high, low, higher high. It'll be a bullish breaker too. And then if we close outside of this daily fair value gap, that'll be the moment where you expect price to go up. You know, tap that. It should respect the midpoint at that point. And then we should see a market maker buy model, right? If that's the case. Otherwise, this whole movement up to this PD array may end up turning around, creating a sell model, going down to the lows here and the lows over here in this green area down there, which I believe was another fair value gap on the upper time frames. This is especially likely if the dollar continues to rally. Again, the rate hikes conversation is extremely important to keep tabs on. Whenever you hear rate hikes, that is negative for the stock market, positive for the dollar. If you hear about a rate cut, that is positive for the stock market, right? Because money becomes cheaper to borrow, which stimulates economic growth. That's why the current administration wants to cut rates, not only for that, but also for the debt that the U.S. obviously has to pay back. The higher the interest rate is, the more debt we got to pay back, the more interest. But yeah, that whole situation's a mess. But hopefully they figure it out, right? Yo, good morning, Fritz. What's up, Byron? Maddie? Appreciate y'all hopping on. And again, if you guys get value from the content, don't forget to like the video. I know sometimes we forget, but it really does help the channel out a lot. And it's much appreciated. So yeah, let me get my charts back up. I don't know what the hell is happening. So yeah, if we were to drop down to the lower time frames, yeah, we're gonna go to the lower time frame real quick. I don't know what just happened. Okay, so this is our view for the three indices. Zoom out a little bit, or zoom in a little bit. So we've got this little gap in here, fair value gap. So we'll watch the dollar, see if it can hold that level. But all in all, you notice there's that little SMT in here. That's something that on the surface kind of supports my thesis when it comes to the rate hikes being negative for the stock market. If we can't breach this and we stay below this fair value gap, it's just a revisit to the daily fair value gap to continue the drop, especially with SMT, especially if the dollar decides to get some legs and runs higher. But if we now take this down to a 1 minute chart, what do you guys see here in this chart? Can you let me know in the chat? Yeah, let me know what you guys see. Again, I'm not a mentor that just likes to throw the answers at you. I want you to use your brain. What do you guys see in here that we talk about all the time that maybe could have been used for pre-market trading? All right, what do you see in the chart? Hopefully by now it pops off the chart at you guys. You know, whenever markets go higher to go lower or lower to go higher, there's something you have to see in the chart, or you should start to see in the chart over time, especially being here. Yeah, you see a market maker sell model right here, right? And you also see this attempt to offer a buy model. But what happened? We got to the second stage and it gave it up. So whenever you have a failed market maker model, in this case, a market maker buy model, and price gets up beyond the midpoint, up to that point, you may think, oh, well, this is second stage. It's going to target the highs up here, right? Well, once it fails and can't stay above that midpoint right there, and we close below this low to that high's midpoint. So here, let me mark this off for you real quick so it's easier to follow along. So that right there is the initial buy model equilibrium. But once you close below that equilibrium, especially if you get a characteristic like this where it comes back into it and aggressively pushes hard away, once you see that happening, you then have to consider this low to that high's midpoint. And then if we can get price to get below both of those midpoints and respect this lower one, then you can expect we went from a market maker buy model that failed to a market maker sell model. So you go from targeting the high up here, once you get down into this level, to targeting the lows down here, from a buy model that failed to failed in the sense that it failed to stay above the midpoint of that overall range from buy side to sell side, right? So the sell side of the curve for a buy model fails up to the midpoint. Once that fails and you get down below this one, right? Initially, when you see this first one failing to stay above equilibrium, once it's already traded above it, that's already a red flag, right? So this is okay for it to do, but we want to see this type of behavior continue. But once it closes below that, you have to then consider, okay, well, what about this low to that high? We may go from buy model to sell model. So when am I going to be able to fully determine with confidence that price is going to try to drop and be a sell model now instead of a buy model? Well, you measure out the low to the high, get that midpoint, and if we're closed below or closing below both of these equilibriums from both of the ranges, this one and this one, then you can rest assured that this low is going to be targeted and you have no real reason to continue looking for buys. Okay? So does that make sense? Let me know in the chat. Give me a one in the chat if that makes sense. This is called the market maker model flexibility protocol. Nobody else uses this in terms of market maker models because they just maybe haven't discovered it, but now you guys know. So it's a way to verify, validate. Those of you that have been with me for a while know I talk about this all the time. But hopefully you guys on YouTube can now benefit from it as well. Again, it's all surrounding market maker models, which is the anchor to what it is that I do and how I internalize price delivery. From Power 3 to market maker models, those ideas literally give you such a vast understanding of what the market's going to do. One thing I also do want to point out is when price went lower and then targeted the high here, that could be considered a market maker buy model inside this larger market maker buy model, right? This is inside the smart money reversal of this larger buy model. So you got a buy model there, and then we have a failed sell model to target the lows. We have sell side, buy side. That's a balanced price range. So price came down to the midpoint or upper 25% from this high to that low. And we continued offering another market maker buy model, a small one. If you go to the 5-second chart, you'll see that that's also a buy model. Anything that goes lower to go higher can be classified as a buy model, right? Anything that goes higher to go lower can be classified as a sell model. If you're bullish, sell models should fail, right? If you're bearish, buy models should fail, right? From high to low, it should not come to the midpoint of whatever range was just created, especially if you have aggressive price delivery like this that breaks down. That is, in fact, a breaker in itself, right? We have high, low, high, a higher high, down to a lower low. So we went from liquidity to liquidity instead of liquidity to inefficiency, right? And it was a completed market maker sell model in here. And this got us, ended up getting us below these equilibrium points, which then fully triggered in the market maker sell model. Once price gets below this accumulation here, you pull that over, you get the lowest portion, and you could see the speed from that level aggressively pushing lower for the second stage of distribution, targeting the lows. So yeah, I hope that makes sense. Again, this is something I talk about all the time, every single day in my private group, but every week here on YouTube, and it serves you well. This run higher in here, because we took out this low, completing that market maker sell model I just framed out for you, we should not, if this is bearish, see price come beyond the 25%. Isn't that ironic? How it tapped exactly to the 25% and said, nah, I'm not going. Isn't that ironic? Must be random. But the invalidation for this would have been up here, right? If this was to break this midpoint, which is this whole range, right? Once it gets above that, you then would shift to this equilibrium, which is pretty damn close, right? At least up to this point. So once it was to get up into this and takes out this high, you then classify that as a sell side of the curve, and then completing with the buy side of the curve, targeting these relative equal highs up here. Okay. Now I have Alanus. What's Alanus? Am I saying that right? What is that? What's Alanus, Matt? Not sure what that is. But yeah, so hopefully this makes sense. So given what we see so far, if we move up a little bit, right, we have the fair value gap in here. If you take this high to that low, I believe we're resting at equilibrium. Actually clean some of this up for you. Okay. So yeah, this is a previous new week opening gap, but was it a weekly volume imbalance? Right there. So if it stays above that, I mean, look at the weekly chart, right? Is it fully committed to go one side or the other? So in all honesty, it's kind of a 50-50 environment until we get out of this equilibrium. Because when we rest at higher time frame equilibrium, which is where we're basically at, just a little bit above, it's pulling back and forth with equilibrium. Ironically, this is happening at the end of the month, right? Which is, again, must be random. But it generally happens a lot of the time. Okay, let me actually remove that. So we'll keep tabs on that. We do have this big down candle in here. It's not the lowest, so it's kind of an issue. So this change in state of delivery, in my opinion, is more significant than the order block here. But this area, if this is going to be a buy model now, and we do end up eventually getting above this, the early sight of that is seeing this get respected, right? We should not, if this is bullish, if it does want to be bullish, which I'm not going to be of the, I'm not going to have that opinion for now, unless we were to get up above some of these levels. We're still basically respecting this fair value gap. If this was the 1 minute chart, right, the 16 hour that we're looking at, if this was the 1 minute chart, what would you be thinking, right? What would you think about price in this instance? Is it more likely to go higher or lower, right? Or is it required to wait, right? If this was the 5 minute chart and you would think, okay, well, I got to wait, I'm not sure, we're in the middle of the range, then that perspective is the same when you look at a daily or a 4 hour, or in this case, 16 hour or 8 hour, right? It'd be the same thing. This right here will be a shift in market structure. We have peaked above the open here, which on the 16 hour is a rejection block. So you could see the vicious response off of that rejection block right in there. So if we were to copy that and paste it in here, it's literally right there in that level, right at that equilibrium point. from this low to that high. Look at the sensitivity to that. It's beautiful. Again, I'm going to elect to wait till 6:30 and see what this first 30 minutes does, especially because we have news coming at 7 a.m. Pacific Standard Time. Can there be an argument for you to have went in here and found a trade setup? Yes. Right. I literally just outlined what you could have used, how you could have navigated this. But again, we have rules. Okay. You can go ahead and try to trade pre-market open like every single day if that's what you want to do. But when there's news at 7 a.m., they're most likely going to wait for the news, right? They've made this aggressive move, creating the sell model. So it's been very, very, I guess, very dynamic, right? We have taken out London's lows. Okay, so now, with all this other stuff that I just talked about out of the way, let's start to identify certain liquidity pools, okay? So we got, is that London's high? Yeah, so we got London's high here. So for the second straight day, before the open price comes out, we've had London's high and London's low swept. For the second straight day, it's done that exact characteristic. So London's high was used as counterparty to target the low here in this market maker sell model, right? So London's high was used to then target London's lows. What do you think retail is thinking right now with this huge decline? They're probably going into the open thinking, I'm going to short, I'm missing something. So what they could potentially do is run up above some of this liquidity here and then look to smash it lower if that's what they want to do, right? We, again, do have the equal highs up here. I don't like how shallow that is. It's a very shallow run above these highs. You see this fair value gap that was respected, the up candles, right? So buy side, sell side delivery, creating the bearish order block. And with precision, price tagged it and then triggered in the market maker sell model, smart money reversal. So this is the PD array you could have framed the smart money reversal on. Aside from that, though, again, we traded through this rejection block. And then we also tagged the midpoint of the wick there and the lower portion of that daily fair value gap. Whoops. Let me put this up there so you guys can follow what's happening visually. Again, you guys see a lot of movements. If you're very antsy right now, that's a problem. So you got to relax. Okay. I know that, most traders feel that when they look at the chart right away, they should find a setup. Could we go in and immediately find something? I mean, we've done it before. Is it something that's ideal for you to make a habit? Absolutely not. You want to be calm, cool, and collected and wait for your setup to unfold. You want to think before this session begins, what is the model you're going into the chart looking to aim at, right? For me, first and foremost, again, it's the breakers or mitigation blocks, which in my opinion is one model, just different variation. It's like brother and sister, right? So if it's not that, if I can't find one of those, then I see the razor model, right? Which is simply a stop run into a PD array or liquidity, inversion fair value gap, displacement through the inversion, creating a bearish order block, and then it takes that order block, and then we enter on the order block, right? So double change in state, essentially. So if it's not one of those two scenarios that takes place, I have to wait. I have 6 models, so if I can't find those and I have high conviction about a particular direction, then maybe I'll use one of the other models, right? But those specifically are the 2 that I like. And I go into the chart looking for those in particular. The reason I'm kind of classifying this for you guys in my private group and on YouTube is because I have so many models. I get a lot of questions like, what should I focus on, right? There's so many things. Mind you, I almost have a decade of experience. So I've spent 6 months for each, at a minimum, 6 months developing each concept and how they work, the rules, where they work the best, where they work the worst. different scenarios that they play out in, more so than others. So it's not just, I didn't just wake up one day and think, okay, I want 6 models. I grew into breakers, and then the rest came as a result of that, right? Of my experience growing. So I don't go in there thinking 500 different things, right? We find the lay of the land like we just did with the liquidity. We have previous day's low, which is right here. Well, that's more so Asia's low, actually. Let's map that out. So Asia's low. Okay. We got these relative equal highs and a failure swing in there. So that's kind of suspect. Again, let's watch this equilibrium here. 630 did just come out, so let's get situated here. Good morning, Fancy. Alanis Morissette. I'm not sure who that is, brother. I have stuck in my head. Is that like an artist or something? Potentially. Let me see. Okay, so yeah, this is a very aggressive beginning of the morning session. So we did get pulled all the way down and tag that. Again, we got to keep in mind what price is working within. So that is a daily fair value gap in there. Again, these equal highs up here, they're part of London's liquidity. So they dragged it lower. Ironically, they took it right here, and then they're now using London's low as counterparty to potentially take these highs up here. We're above the midpoint here, so my objective will be the highs until proven otherwise. So in this case, I would map this out. That is a previous accumulation. So if I'm correct, this is going to be used as support to then target these relative equal highs. Okay, so there's nothing in here for me to take a trade on yet. There could have been an argument for this right before the open, but that's outside the rules. I don't take a trade right at the open. So I'm more than happy to let that go. Let that first 30 minutes unfold. If you're aggressive and you thought bullishness, right there's a 2022 model. And we got stop run, displacement through the high that created the stop run, shift in market structure, then fair value gap, rally up. But it's not within the rules because it's right at 630. Unless you've allocated room for that to be to be part of your system, you're not encouraged to take that. So look at this immediate rebalance. That is a very strong bullish indication. So it looks like we're going to be correct. It's going to take these highs out. That right there is a wonderful signal to identify. We've mapped out the buy model in here. Previous accumulation turned to distribution. So this area in here should not be revisited. We should leave this as a breakaway gap, and price should really look to accelerate through this high here. So let's see if we're correct. On the 4 hour, we have a rejection block, it seems. Yeah. Oh, well, pretty much that is a rejection block. If it trades through it aggressively, then again, that becomes a bullish order block, and we may look to put this in jeopardy. It's been a very, very nasty return to the middle of this range, back into a premium. So again, this may very well turn into a buy model. We're using this accumulation. This is a very stretched accumulation, but that upper portion is being used as support. You see that? We're leaving breakaway gaps down here too. If dollar declines, then this will be highly supported. But yeah, look, the assumption that this level should hold real time in the moment, we've now been proven correct with that quick analysis off the characteristics we saw right here with the immediate rebalance. Could we have taken this trade? Sure, but what did I say? What did I say is my mode of operations today? I'm going to wait till after the first 30 minutes unfolds. I want to see what happens closer to that news event. I want to get into the macro, right? We're not in a macro yet. So yeah, could you have taken this trade? Sure. Am I willing to take it right now? No. Do I care? No. Should you care if you didn't take a trade right here? You shouldn't care, especially if you're here spending time with us regularly, because the amount of setups we give and talk about is absolutely absurd. Let me see. I'll send you a link. She's an artist with a song called. Oh, okay. I see. I see what you're referring to. Yeah, it's gonna be kind of interesting if they're gonna want to use the very last day of the month, which is not typical for them to give this acceleration. It seems like they've already begun the acceleration. But again, we need to see if this is going to hold in here. Dollar still hasn't fully committed to sell side, right? Really, honestly, just looks like it's going to tag this and then reach for our initial objective, which is the monthly fair value gap up here. That's what we outlined on Sunday, and we pretty much accelerated last week. Well, it was last Sunday where we talked about this. Not this previous last Sunday, a couple days ago, but the Sunday before. And you see that it opened up right out the gate, rapidly pushed. So, starting this week, it's given a slight retracement back into this fair value gap. We have a wick and then displacement, so that's a BPR. So again, we need to start seeing things get violated aggressively if it's going to be a trustworthy sell side delivery or anticipation of sell side, because it's just rapidly going higher. We did take out stops up here. We did hit this 3-month breaker, which is a quarterly breaker. So it's really contesting that. And I mean, it just makes sense for them to try to get up into this before they look to really commit, because, the big players take positions at big PD arrays. We do got the indices, or the currencies kind of having a slight decline in there. So that's going to be interesting to see what happens. Got trendline liquidity down here. We do got SMT, right? You see that? Wait. Not really. Yeah, it looks like it's pretty solidly the same. Yeah. What we do have SMT on is the highs. So that's bearish. Dollar still looks like it wants to go higher. So this is very suspect. Again, I'm only confirmed that buy side is going to be trustworthy on the indices if we get up above this daily fair value gap in here. Otherwise, it's been holding. But what we see in here clearly is starting to support a continued run back to the buy side. We have the 75% of the range right there to watch, so you got to keep your eyes on that. But yeah, right out the gate, huh? It's just right out the gate, bro. So yeah, I'm willing to put this on the sideline for a minute. Like I said, and we'll see what happens. This order block in here is what I call the momentum order block. We have a wick and a displacement that encapsulates that whole entire candle. You see we also created a rejection block here. It's very interesting. Let me see. Yeah, you see that rejection block right there? So yeah, let's see what it wants to do here. We just triggered in this as a bullish order block. So if it comes back down into that and respects it and then starts to be on a continued tear, again, we got to watch this daily fair value gap. Once it gets above that, we would then expect this to act as support. And then that is something that I would then be comfortable with identifying this as a market maker bottle with market maker buy model overall. But right now, I'm not going to sit here trying to chase price. I'm not going to be too antsy. We're almost into macro, so let's see what happens. We're hitting the midpoint of that, so it still has a chance to get respected. We got relative equal lows here. I'm not sure what this gap in there is. Okay, so this is the gap right here. So let me mark that. Is that 8-hour FVG? It shouldn't have to come back down here though if it's going to continue to be bullish, which it seems like it's going to be. But again, we have to confirm a change in sentiment by seeing higher time frame levels get confirmed and traded through, because these could very well do something like this. Hangs around in those levels and then immediately goes back in line to the downside, given this huge decline. But because we're up above this, there is starting to be a pretty solid likelihood the buy side is going to keep getting fulfilled. At the moment, it's straight buy side. And we got high, low, higher high. So you can also look at this up candle here and see if that can't hold. If we trade into it, see if it can't create another change in state of delivery after it tags that to the upside. If it does that, then, you know, we could really start to consider, especially because time is now getting in alignment. We could then consider looking for potential buys. But right now I'm sitting on my hands. Yeah, you see how it's having a pretty solid reaction to that midpoint. We got a lower time frame, potential momentum order block if it was to go lower. I'm not assuming that at the moment. I would like to see this midpoint from this low to that high get violated and close below. And then we could go to the 15-second chart and use that as a market maker sell model. Right? That'll be the scenario where I'm okay with looking for a short. Looking for a buy is going to require this to accelerate through this high, return into it, and then we could then potentially classify that as a bullish breaker. So just sitting on my hands, letting price come to us. We're not about to chase nothing. We're definitely not worried about missing a move. It's nauseating how many opportunities we find every day. Yeah, 200 points in 6 minutes is absolutely nuts. What's everybody probably thinking now, right at the open? Bullishness. Higher time frame still has not been fully invalidated. Our 3 PD array rule has not been fully taken out yet. We got the order block here. We have the high and the fair value gap. Right? If you look at the daily chart, we still need to get above this fair value gap to complete a 3 PD array disrespect. Right? I mean, simply above this high, we have the volume imbalance, the high, and then the order block. So it's definitely giving it a run for its money, right? So it's definitely highly high risk to try to take any type of short, at least for now. It's better to just wait, right? Let it really commit. And then once we get up above this fair value gap, though, that is the green light that these equal highs up here will be targeted. And then you could find a pretty confident setup looking to target those highs up there. Before it gets up there, though, you then have this level to look at. You know, we still got to get through the midpoint of this order block. Oh, we could actually use this one. This is inside of this one. So the midpoint right there, 34.88, could look to be a target at some point if it goes higher. But yeah, I'm going to wait and see. Let's see how this breaker is treated. If it even comes down into it. If it can't even come down into it, that's a good sign for bullishness. But yeah, we got the high, low, stop run. So counterparty liquidity being London's low. with massive displacement. So we should see very solid sensitivity to this level here. We're also in that lower part of the daily fair value gap. So if this daily fair value gap is going to end up being an inversion eventually, early signs would be seeing this get respected and then just rocket its way up to these highs. And then once it gets above these highs, if it does do so, any return down into that should be sensitive because that should end up acting as a BPR, especially if we get displacement through this high. And we're seeing very strong sensitivity there. So that tells me we may continue to see continuation. So that breaker is definitely holding up. We got another breaker, high, low, take stops, higher highs. So any return into that, you got to watch and see sensitivity in there. If it's going to continue to be a trustworthy run through to the buy side. So we're in the almost in the 650 macro, 5 minutes before. A lot of times the macros begin around the 5 minute mark, ahead of the last 10 minutes, first 10 minutes of every hour. Appreciate you saying that, Jen. Good morning, by the way. Yeah, so hopefully everything has made sense up to this point. I know those of you that have been with me for a while, I mean, this should be fitting like a glove you've worn 1,000 times. Right, you should hopefully now start to feel confident. We have a wick here with displacement. It should be sensitive there if it's going to keep going higher. So that wick right there. Let's see what happens. I'm assuming that this itself is a bullish order block. If we move up, yeah. So yeah, if it gets above that, I'd like to see sensitivity there. And then that should be enough to try to get us beyond that. But again, this is highly risky to trade buys into a bearish PD array like this that has not been fully traded through on the heels of something so bearish. It's highly risky. You know, again, is there an argument for you to have taken a setup? I mean, by now, with what we've talked about, clearly there's an argument for a couple of different things to have been done. The immediate rebalance being probably one of the best ones. Look how fast that was. Right? And we identified that right when it happened. I told you guys, once it takes this out, it should use it as support. It came down, set up another PD array, which is the immediate rebalance. And it did what? Immediately rebalanced and ran away. Sean, I agree. We may end up seeing a little bit of chaotic movement, especially because we're so close to the open. Everybody's probably trying to buy right now. They're probably chasing price. You see this red line in here? We have SMT somewhere. Yeah, so you see that with the ES. Damn, look at the high resistance delivery in the S&P. That's super high resistance in comparison to the Nasdaq's like aggressive run. So I don't want to keep this too busy for y'all, but I don't want you guys to miss any different characteristics, right? It's kind of an internal argument I'd be having with myself. Which order block was that? 2 minute. What else? Okay, so that's actually a 5 minute large wick in there. I think I'd rather use these quadrants because it's on the 5 minute rather than the order block on the 1 minute or 4 minute. So yeah, look at that sensitivity right there. So again, what did they do? They right out the gate accelerated, and then ahead of the news, they're going slow. This is the manipulation that happens to traders within that first 30 minutes. If it opens up and aggressively runs, you need to train yourself not to feel like you're missing something. Even though you may have, right? Your model may have shown up, right? Maybe this is your model down here, the 2022 model. Maybe that immediate rebalance made sense to you, right? I mean, we were obviously correct, like as correct as we could have been. But again, you don't want to fall victim to price delivery, right? And the way that they manipulate price to get you enticed. You have a particular model you're looking for, whatever that may be, and you have to wait for it at a particular time, right? You could schedule your trade setups. And in terms of ICT concepts, you could frame them around obviously the kill zones, but you get even more defined into the macros. And, you know, like part of my rule is I need to find a setup within that last 15 minutes or first 15 minutes of every hour. Right. And then once you get into the last 10 minutes, you should already start to see acceleration, or it's setting up your move. If a PD array forms inside the macro, but it doesn't offer your model, like say a fair value gap happens, right? And it just aggressively reprices through the macro. And then all of a sudden we're outside of the macro. Well, if it comes down into that PD array that's in that specific time window and your bias is correct, you could still use that PD array as if you were inside the macro, if you're correct on narrative. Right? That's something that most people don't understand about macros. They think that right when the macro comes out, it should show an opportunity. But that's not the case, right? Just like how, you know, market maker models and breakers and all that, they don't always look exactly the same. Right? But the functionality, right, is generally going to be there. The characteristics are there to observe. Okay. So we do see dollar starting to accelerate a little bit to the downside. If we were to go to, what time frame is that? Maybe not actually. It looked like it here. I don't think it's updating. Some of the time frames you'll notice when you have DXY down here, it's not really going to update accurately. So you got to go to like the 1 minute or the 1 hour or the daily. So 4 hour, no, the 4 hour doesn't. See how it's different down there? I don't know why this happens. Thought it was just me, but yeah, look at that. Now we're accelerating, so I'm pretty confident that we'll take out the full fair value gap. So if we return back into that, we should see sensitivity. Ironically, it's accelerating from the macro. So yeah, we got all the indices looking to pick up. So let's see if we can get a slight return down into this little piece right here. Okay. So yeah, it's all upside at the moment. It's just trading into a bearish daily fair value gap, which is a lot more risky than it would be if it was something if it was a different PD array on a lower time frame. But this is clearly accelerating. And if you take the low to the high, 75%, we should be very sensitive to that. If it trades through it a little bit, the expectation is most of this fair value gap is going to be left available. We have sell side, buy side. It came down into it, treated it as a breaker, like I mentioned. So yeah, we did outline. I don't know why it's not on this chart. I had it earlier. Oh, okay, that makes sense. So yeah, the breaker idea right there was beautifully delivered. So yeah, let's see if this little piece of the fair value gap in there gets traded too. It might not, because again, we have the quadrants in here, 75%. We should see sensitivity there if it's going to be as bullish as we'd like it to be. Now that we're above this, we now have to classify this overall range from the high to the low as a potential market maker buy model. So that's potentially the sell side of the curve. Equilibrium, you see how equilibrium price likes to hang around a little bit? That's where we were hanging out at, right? Equilibrium was down in here. But now we've accelerated. So yeah, watch this 75%. It should accelerate. Especially if we can get dollar to decline in here. Damn, that's a huge candle. Look at that. Sheesh. Definitely didn't expect it to have this much volatility on the last day of the month. It doesn't normally do that. So, again, it's just a testament to the fact that the market can do whatever the hell it wants to do, right? There's no like headlines or anything crazy. This is also happening before the news event could come out. I would expect this to happen at least when a news event comes out, but they decided potentially to price in the news before the news came in, or at least the reaction, right? The manipulation, or just impulse that they like to do at the news events. So you see that 75%, just like we anticipated. You got to think too, like, okay, if you're going to take a trade in here, where's your stop going to be? Because it might not be safe down inside this range, right? At minimum, the 50% would be reasonable. The expectation of this fair value gap being respected, right? You could also use that if this was something you were looking to engage. And then your target would simply be above the fair value gap and a little bit beyond, maybe 10, 20 points above it. You also have the high up here too. So that may be looked at as a target. Got this breaker, low, high, lower, low. I think it was a mitigation. No, in this instance, it's a breaker. Larger view though, when it got down below into this, that was a mitigation block because it failed to take the high and displace lower. So that's a breaker. So we're reaching into yet another bearish PD array. So when you're trading bullish and you're going into a large PD array on a higher time frame that's opposed to your direction, you have to remember that that's probably going to be a point in which price wants to retrace a little bit. So if you're holding a trade into those levels, expect some turbulence. Okay. Yeah, potential opportunities given what we mapped out ahead of time. We had this breaker. I just talked about this 75%, that little piece of the fair value gap. We haven't been able to get into that, so that's even more bullish. And then the opportunity here at the immediate rebalance, which I said, I told you guys in the moment, it's going to go higher from there if that continues to be an immediate rebalance. Maybe you didn't have the confidence to engage it right inside that accumulation turn distribution or using that immediate rebalance, but once you saw it, maybe you were confident in it. Well, the very next candle you could have engaged. That would have been the best setup of the day. All right, so that's how you engage or can look to engage an immediate rebalance when you see it. Obviously, that would have been the biggest risk to reward. But yeah, that's a concept that you guys can apply. And maybe you find that that's a move that you like to see. It happens every single day. Immediate rebalance. It's another PD array, another thing that you could frame a setup off of. Okay. Official end of Q2. Okay. Yeah, that makes sense. Lots of mitigation from pensions. Yeah. And keep in mind, again, you guys, on the 28th, 2 days ago, the overall markets are now moving to 24.5. So the regular trading hours are going to be 24 hours a day. So it's not going to have that, 6:30 a.m. Pacific Standard Time to 1:15 Pacific Standard Time, right? It's not going to have that. Or what is that? 9:30 Eastern to 4:15 Eastern. That's not going to be regular trading hours anymore. I'm not sure when they're going to fully implement it. It hasn't been implemented yet, but they have begun tokenizing the stock market as well and changing it to 24/5. So blockchain is now being implemented on the back end of the stock market for those that may not fully understand what I just mentioned there. So that's essentially what is happening. There's a transformation going on. Not that the algorithm's going to change, but the overall timing elements, well, I guess the regular trading hours, the timing elements are going to stay the same. The macros and all that. I mean, the proof of this is the fact that crypto, you can use ICT concepts and you can use the futures timing, right? In terms of, 9:30 Eastern, 6:30 p.m. Pacific, 6:30 a.m. Pacific Standard Time being the open price going up to the end of the day, right? Inside the last 10 minutes and first 10 minutes of every hour, you still see that in crypto, it still operates. That in itself shows you that everything is going to stay the same. If it was going to change, things would be different. You wouldn't be able to use these concepts in crypto. But yeah, what a massive run. Unfortunately, it was just like outside of the timing. I mean, I could have felt like, okay, let's engage this. But again, the news at 7 a.m., I'm not really willing to trade ahead of a news event on NFP week. I'm just not willing to do it. All right, does that discipline sometimes keep me away from good setups? Sure, right? Today could be a good example of that. But, I'm not concerned about it. You shouldn't be either. But again, there was multiple potential ideas. Mind you, we walked this entire thing up. I talked about how it's going to keep going higher. Talked about how it should respect this breaker if it's bullish. Also react very sensitively to the low of the daily fair value gap. But now that we're beyond this daily fair value gap, if we can get price to start closing outside of it, right, we may end up continuing to see this now invert. And then now we're officially in a bullish trend, right? Back in line with the continued buy side delivery. And we should end up seeing the yields drop, right? And the bonds should start to rally. But that's not necessarily happening at the moment, right? These are not picture perfect correlation, but sentiment wise, it's absolutely something you have to consider. Okay. When it's cracked in correlation, again, it makes it a more tricky environment to look to engage. Sean said 10 a.m., 7 a.m. Reversal could happen, but sometimes with the news, it's just, yeah, exactly. In that case, you would then have to adjust your perspective and go with the silver bullet. So, Sean, it seems that because you like that 7 a.m. reversal, I want you to keep tabs on that. Pick one entry tactic, one PD array that you're going to focus on to engage. Over time, you'll be able to implement more of them, like you see me do, and many other students do. But you want to narrow your focus. And then eventually, if you do decide to shift and add a little bit more, it doesn't necessarily have to mean that you're going to add more models. You could use the same initial model you want to use with the main PD array, but the others, it's good to understand them and be able to identify them and go back and study them because they're like gripping points. It's the greatest analogy ICT has ever made in terms of how to manage a trade and how to manage your identification of all these PD arrays in price. You have one entry model, and then the rest of them are just gripping points, supportive ideas, right? And I think it's just a highly effective way of viewing things. I don't think this fair value gap, by the way, is going to be traded all the way into. We do have this high here, but more importantly, aside from this high here, we have sell side, buy side, and we have an inversion fair value gap on the daily. This, if it's bullish, is going to absolutely respect this and rip to the buy side, right? We are pretty extended in here, but we just took stops. So I'd say that if we get up above here, I would be watching this, see how that responds. Because, yeah, clearly we're still respecting this. We haven't broken down. Now we just shifted above the order block in there. So now we need to watch and see how that order block level is going to be respected. Let me take some of that off. You see this drop down on this 5-minute chart, went right to that fair value gap and accelerated. So yeah, that's interesting. Still got that little itty bitty gap in there. But I don't, at least for now, think it's going to get down there. We got, okay, so yeah, that's that little gap we see on the 5-minute. Okay, I'm gonna just actually remove, let's save some of these. So yeah, the news just came out and looks like we are continuing to rapidly move through to the buy side. Watch this order block here. It should continue to hold price if we are going to get this to really accelerate. And again, the next idea that we're trading into is right here. It's a bearish breaker. So yeah, it's just on a rampage, really. Again, it's better to be more cautious when price is trading into a PD array on the daily chart that's been respecting price, in this case going lower. It's better to be on the side of caution, especially at the end of the month, than it is to be aggressive. And of course, sometimes you'll be rewarded for being aggressive. Clearly, everything that we outlined going up to this point, pushing price higher, minus the bearish fair value gap that was present, which has now turned to an inversion, bullish. Other than that, everything has been working out through to the buy side. Every piece to the puzzle, the market maker buy model, the stop run from London's lows being used as counterparty to then go higher. So today, this morning, we've wiped out London lows and London highs. You see these equal highs up here. I talked about how those were a bit suspect, how it was very shallow. And if it broke through the midpoint here, it'd create the buy model targeting those equal highs. And then we ended up trading up above that midpoint, which then led to us getting up above the daily fair value gap. The only way that bearishness will be considered really is if we could see that price comes down and breaks back down below the midpoint here. In that case, that'll then turn let me see. Yeah, that'll then turn this current daily candle into a wick. Okay, so there is still that risk, right? Because on the daily chart, we have not closed outside of that daily fair value gap, right? If they want to continue going higher in the dollar, which is what a rate hike is going to do, we haven't got there yet. The 29th of July is when the rate hike is going to happen. Maybe they wait a little bit. But if they're going to try to price that in early, we'll know that that's the case if price can get back down below this. But for now, everything is just to the upside. Unless we were to break down below this fair value gap. In that case, this would be then potentially considered as a market maker sell model, supported by the fact that this daily candle currently is not able to sustain price delivery above the upper portion of that daily fair value gap. So yeah, we're watching this order block in here. If it's going to be bullish, we want to see that get respected, especially because we already ran stops here, already pierced through it. There is somewhat equal lows there with this fair value gap. So again, if we were to break down below this delivery higher, that would not be something that would be very supportive. Okay, we'd also be breaking through this order block. So again, it may look to try to dig a little deeper, hang around inside this fair value gap. But yeah, we've had a very sustained move, so pretty prolific for the last day of the month, ahead of the news. So again, we came into this morning with very shallow perspective, expectation. Didn't really expect much, but price has done a little bit more to the upside than was expected. And again, now that we're above this, we could then look at this as a potential supportive idea for price to go higher if it is going to indeed continue with this buy side delivery. Again, we are trading into this mitigation block still. It's rapidly got above this rejection block, which is also a bearish or a bullish breaker, high, low, higher, high. So that breaker plus this inversion fair value gap plus this acting as a change in state of delivery. Right, all of this stuff is starting to build the narrative continuing to go to the buy side. It's building your argument to see this continue. And if dollar can continue declining, which it's not doing at the moment, right? But if it was to continue, say it was to attack this high here like it is, sweep these, and then aggressively start to reprice below this and it inverts that level, Then we'll also start to see this invert, and then we may take a ride lower, and that'll be further supporting the currencies going higher, which they're not really doing anything too cooperative with. And then this should also drag the indices as well. But again, now we're kind of just at the top of this daily fair value gap. They're very sensitive levels that we're inside of, and they're going to allow for us to make a decision. All right, is it going to continue going higher and target these, or is it going to wick this? Because look what it's doing right now. If this was to wick up into this and then close back below this inversion by the end of the day, that makes this not bullish anymore. There's no real interest to see this be bullish anymore if that happens, unless it was to do that and then get back above the daily fair value gap, fully closing above, which confirms the inversion. This inversion on the daily has not been confirmed yet. So the risk of this looking to go lower again is definitely there. So see what happens. Okay, so now we're back below this level. So if we take this and drag that over there. Again, it's very important to understand what validates and invalidates a PD array. Like, what are the characteristics when they unfold that help you verify whether something is worth holding or not? I believe there's SMT at these highs here. Yeah, the Dow looks really gross. This is very seek and destroy type of vibe. It looks like the Nasdaq is absolutely the strength holder of the day. Yeah, we had SMT here too, which is interesting. Bullish. Let's get back down to the 15-minute real quick. Look at that. We almost got another immediate rebalance just on the 15-minute chart. If that would have happened, that would make this even more likely that it's going to keep going. For now, there's no real interest in trying to go bearish unless we were to break through this aggressively, like I said, and get down into this. It's only upside ideas, right? If I was looking to engage a trade, for the moment, that's the only real perspective that I could build confidence around. The shorts just, they're not confident, especially breaking through this daily fair value gap. So yeah, we should continue to hold above this level. So this retracement, right? If it's going to be bullish, may set up an optimal trade entry. Yeah, we went into the macro, right? Delivered, and then all through this macro, it's kind of just been sloppy, sideways. Basically accumulating above this fair value gap. So yeah, this high here to that low should act as a BPR. We should be engaging a market maker buy model. So we should see all the further characteristics in price further support that idea if we're going to trust that that's the case. And we're shifting from the downside to the upside. From a sell model that ended up failing to now a buy model that may look to target these equal highs up here. So yeah, that is the longer term perspective up there. So again, you got to think, okay, where's your model for entry? Do you see it in here? Is there anything that you like to trade showing up in this price delivery? If this does end up continuing to go bullish, it may use this as a change in state. Right, the origin of this continuation may end up evolving from here. It's also above that daily fair value gap. Yeah, Sean said not yet. Yeah, for me either. Right. Again, I could make an argument for these. Right. I guess it could be classified as a potential missed opportunity in here. But again, is that a breaker? No. It's just a simple return into the 75%. Look at how sensitive that was of that whole daily fair value gap. You use that 75% as a very sensitive response. We had accumulation in here, manipulation into the breaker. Now this breaker, if it was, I mean, I could have pushed it a little bit in there because it was 1 minute before I like to observe the macros. So that could definitely be looked at as a missed opportunity there. We called the breaker, we called the immediate rebalance, we called all these different things today. Called this, and this, all real time. But sometimes, especially at the end of the month, you gotta just relax, right? You have to sit with times where you're gonna miss a trade setup. It's fine. It is what it is. Because we all face this, right? It's not like it's gonna be one person or two people that go through the same stuff, missing trade setups, not liking a particular condition, seeing red flags, kind of waiting because of them. You know, we all face that. So you got to know how to manage your mindset. Because if you go in thinking I'm missing something and you miss the trade setup, and then you go in thinking you're going to continue to miss it and you have FOMO, that's where problems occur. Because then you'll chase price. Anytime you look to catch a continuation that's, say, going down into maybe a fair value gap, or if it's going down into a bullish order block, anytime price has already taken off and you're looking to trade the continuation, you never want to trade when price is pushing in your direction. You want to trade when it goes against your direction. Okay, you want to trade going into a sell-off that's trading into your PD array of choice for your continuation. Right? You can wait for it to confirm by doing something like this. But again, if you're trading when price goes into something versus when it goes away from something, look at the difference in risk management. Or even if you just took it right here, when it pushed down into that upper 75% versus needing it to push away. Look at the difference in positioning. So you got to get comfortable with this and practice. Okay. Because over time, it's just better for your risk management. It really is. Again, I just want to remind y'all, don't forget to like the video, subscribe to the channel if you've gotten value today. Definitely helps a lot. So thank you in advance for that. Again, it's funny. I see so many people come and go onto these calls, and I know for a fact it's because they're jumping through multiple live streams to see who's giving a signal, right? It's like, what a shame that is. What a shame. Because if they do this to a lot of the good traders that are sitting there, literally walking through the whole entire process, how you can make a decision on your own. And it's unfortunate because those people are going to be failures. It's so sad. It's so sad. Well, I don't give signals in the same sense that most people do. I mean, at the end of the day, I'm telling you where price is going to go, and hey, I think it's going to hold here. I think it's going to hold here. I see a breaker here, right? I point these things out, and all it takes is 2 brain cells to rub together and some patience, and you'll see that the opportunities are there. I'm just not saying, all right, guys, I'm taking a trade at 3132. Stop is going to be at 3100, and my target is going to be 3300. I'm going to enter. You guys should too, right? Like I'm not going to do that. First of all, it's very risky because you're not a financial advisor, and I don't give financial advice. And second of all, if that's what someone gets accustomed to, although I could probably make a shit ton of money selling a signal service, I don't want to do that. Okay. I want to help you learn to be your own signal provider. And if you decide to go ahead and do that, there's nothing wrong with it. Because some people can't trade. Some people can't engage. Some people don't want to spend the time it takes to sincerely make this something that they can do on their own. But they still want to participate, and again, there's nothing wrong with that. But my channel is for the people that want to learn, like you guys who are here with me all the time, and those that, you know, have that objective, like Jen, like Sean, like Maddie, like all of you in my private group, like Fritz here on YouTube, like Tony, who's here a lot of the time, and a handful of others. You guys spend time and you guys have been making progress. Some of you guys are more new than others, but yeah. Yeah, I mean, that's the thing. If someone starts a signal service, you got to remember that it's like you're not going to be perfect. Most of these people think that they're perfect. They try to claim they're perfect or close to perfect when they're really not even close, right? And then, of course, you know, if you don't set the table early, you're going to have a lot of problems because you're inviting signal junkies. That's like inviting drug addicts to your your service. So it could be very inconsistent. People are going to quit, right? People just won't have the right expectations. And you're not going to be perfect. So if you do start a signal service, you got to remember that you have to lay that out. Okay. You have to make it very, very clear what it is that you're doing, how to identify when you're calling a setup, right? Tell them the risk, tell them how much you like to target. So then they can at least get the bare minimum, right? You may hold it for 100 points, but if you set the table with the bare minimum being 30 points, they'll take profit at 30. You train them to do that. And the ones that do listen, right, and end up trusting you, you know, they may end up sticking around for a reliable amount of time. But then again, it doesn't help you not overtrade and over leverage, right? It doesn't necessarily help in the way that this style that I do here on this YouTube channel and my private group does. You know, you're not independent if you're waiting to get on to follow someone's trade setups. Because what if they're sick? What if you've quit your job to trade full time based on signals and that person is not on? Maybe they go on vacation. What, are you just not going to look to take a trade? You're just not going to engage? It doesn't make, I've never understood those that like only signals. Because it's like, what are you really trying to do? Right? It's like they're trying to piggyback off your success, and it's like they don't know how you're thinking. They don't know if you're going to hold the trade longer. And if you engage a trade and they think, or they miss the trade setup, what do you think they're probably going to do? They're going to chase it, especially if you prove to be correct a lot. And then price is going to retrace and they have a bigger stop loss than you had, right? So, and then they'll get stopped out and then complain and all this other BS, which is annoying, right? Because most people that are following just signals are not going to allow themselves to miss the trade setup. They're not concerned about the psychology because they're expecting you to do it for them. You're already managing the trade setup, the psychology, right? So they expect you to do that for them. And yeah, I mean, the stress for a lot of people is it's a little bit too much, right? It becomes a little bit too much because people can hurt themselves. You could be correct and they could still hurt themselves because they're gamblers, right? If you're taking trade setups based on someone's opinion only, like just because they said so, you're gambling. That's in a sense, gambling. If the person's good, right, you may have a little bit more of a likelihood, but again, you have to follow exactly what's going on and you have to manage risk just like them. That's another thing. If any of you do end up taking the skill set I teach you, taking the stuff that ICT teaches, and you turn it into a signal service, make sure that you lay the groundwork, right? These are the rules. If you miss a trade setup, let it go. I'm only taking this amount of trades per day, right? Expect that I'm not going to take a trade every single day or give you something every day. Only the best trade setups are going to be given, right? Never overtrade and over leverage. Kind of force it upon them. If they're going to want to get the best result, force the rules upon them. Because they're signal junkies and that's all they're there for, they're probably not going to listen to you, but at least you cover your bases. So it also protects you as well. Right? I mean, you can imagine I've thought about this, right? Like I thought about making a signal service and how I would go about it. ICT himself even teaches in his private group how to do that, how to set up a signal service and do it the right way. Right? But again, it's not for everybody. But yeah, it's definitely an option once you become really good at this. Like say you take this stuff that I teach you and you become really effective, like you see being showcased every week. You know, if you choose to take it that route, that's another way you can expand your horizons as a trader. And you'll be there also doing a good service to those that are serious about trading, but they just maybe are too busy and they just want someone reliable. Right? That was kind of the enticement for me to consider making a signal service. I ran a signal service on Telegram for 6 months. I didn't like the amount of complaining. Right? I'm like, bro, I'm doing much more. Instead of just giving you the signals, I'm breaking down the signals. And people would complain about it. I'm like, you know what? I'm just not going to give signals at all then. Right? And then eventually it grew into, okay, well, I'm going to break this stuff down and then you're going to understand why the signal is what it is. But I'm still not going to give you the stop, the target, all these things, just like on a silver platter. You need to do that work so you can get comfortable with it. I outline it, right? Like I literally have the thing mentioned here, right? This is what my risk would look like if I was to take these trades. Right? Especially right now with the volatility, obviously it's a little bit larger than I would like versus my typical 30 to or 20 to 30 stops in terms of points. But you know, once it runs in profit, you know, I'm immediately pulling it to my 30 stops or 30 points. But yeah, let me see signals, give a false sense of security before you know it. You follow blindly and over leverage. Yeah, that's another thing. Oh, the over leveraging, dude. Oh my God. It's so bad. That's the thing. You got to be a very responsible person with this skill set. You see people that don't even have the skill set that have big followings that are irresponsible. That's why people get destroyed in this in this industry. It's very unfortunate. Yeah, my first year, I was trying to take signals too. I quickly learned that I have no clue what the hell's going on. So I'm in a trade, sweating bullets the whole time. Even if the guy's good, I'm trying to rush my stop even closer when he's not. Right, and then I get stopped out, and his trade goes 100 handles, 100 points back then when I was trading currencies. Yeah, it's a good perspective, Fritz. Rather learn by example and on my own with the mistakes and then do that. Yeah, that's the best way to look at it. If I do ever have a signal service, I'm incorporating AI to the max. And it's going to be based on my indicator that spits out the signals, my razor indicator right here. So it'll just spit the signals out on its own. You know, those of you that are in my private group, if you're month to month with me, you get most of the indicators that I have after 6 months. You get a journal after 6 months. If you come work with me on a one-on-one basis, you get everything immediately because I need you to have it. It just helps me help you quicker. So for those that do like some of the indicators, like my SMT indicator, the Power 3 90-minute cycle indicator, and 4-hour Power 3 indicator as well. So it has 4-hour open. Let me see. I think today it identified the New York Power 3 again. In this case, bullish. Yeah. Well, the manipulation portion kind of expanded right out the gate. So, but you can see accumulation, price manipulated below, and now we're getting distribution. So we should see continued price delivery up to the buy side. Because it's the end of the month, they may have repriced this just to simply close the monthly at a place that they wanted to close it at, which I guess they wanted to be an indecision month. They just dropped it all the way down just to set the low and then, you know, clean up some of this on a monthly basis. And now we're coming off of that pretty aggressively. But you could see how, this indicator yet again has really good building block visuals for power 3. Obviously, you guys can go in and get this fractal indicator, the weekend separator, which gives you the gray boxes on Sunday, ICT everything, higher time frame candles, ICT essentials, all those things you can get. The central bank dealers range, we can get that just on the normal trading view indicator marketplace, right? In this, but the SMT indicator, the one that I just described in here, this timing element indicator highlighting very particular times the turning points happen at, and then my razor indicator, which is basically a signal generator for one of my models, one of my favorite models. All of those you only get in my private group. Also, the standard deviation indicator right here, I really, really like this one. It gives projections. You could use it on all time frames, but it also is used here when you hit a turning point. It'll identify immediately the targets that are above us. So that's auto-generated in terms of the targets. It's also very helpful when you're trying to map out, say, a market maker buy model, and it aggressively drops. If it has something like a breaker or a mitigation block, it'll outline the projections and standard deviations. And many times, if you could align those standard deviations, about like 2 to 4 standard deviations, many times you're going to be able to identify where that turning point is going to be at, right? When it turns around and starts to create the buy side of the curve in a sell model, if you can couple the standard deviations with a PD array or liquidity below you, many times you'll be able to spot the turnaround. Entry at 340, nice. Oh, nice, Jen, you took an entry there, ran up. Yeah, take that and get on vacation. If you're on vacation, you might as well do that and have that be the last part of your trading for a while. End the month solid. Yeah, that's beautiful. That right there is a luxury of trading. You see that? Jen's on vacation, just took the buy up here. Nice. Also, end of the quarter, start of the next quarterly wick might be a week's worth of back. Yeah, exactly. That's a good way to look at it, Fritz. Man, Fritz, think about when you first started watching my content. I don't think you even considered some of the things that you say nowadays. I don't even think you were even aware of these things. Now you're thinking, your thinking is really, really aligned compared to when you first started watching me. You're just here with me on YouTube. You say you learned a lot. Yeah, I'm glad, bro. I'm glad. I try to do my best to give you many, many weapons, all of you, right? As my token of appreciation for you guys watching here on YouTube, supporting the channel. But yeah, you have a lot more to learn, brother. It's going to just keep going. Every single concept that I teach also has massive depth. Like we can go for 4 hours on order blocks, on fair value gaps, on liquidity, on just everything we ever mention, higher time frame analysis, right? It's really, really deep. So just keep that in mind, right? There's lots of things to discover on your own as well. ICT has 81 PD arrays, 81 different ways of getting into a market. Multiple of those 81 different ways to get into a market. There's also defensive PD arrays, like he's mentioned before. Like, for example, the BOLO, right? He's talked about the BOLO. It's kind of a defensive PD array. It is a defensive PD array. You could use it as an entry PD array, but there's little quirky things. Like I found the razor model that I just mentioned earlier. That razor model, I've seen ICT point to it as an entry method. I literally have the video where he outlines my entire razor model and says, this is another variation of an entry method. Doesn't give it a name or anything, right? But we gave it a name. So there's many, many, many different signatures and price that you can discover. And you will find stuff on your own over time. You spend enough time doing this, you will find something that's unique to you. But yeah, it's unfortunate that this right out the gate decided to just rip aggressively. Then again, like I said earlier, that this right here definitely was a missed opportunity. I could have looked to engage this and put my stop below that. Right at the fair value gap there. Stop down below that. But you know, this month has been really, really nice. The whole entire year has been pretty nice. You guys have seen me publicly as well. So yeah. It's no real necessity on NFP week to push aggressively at the end of the month and then possibly do damage. Clearly, every entry that we talked about today would have went profitably in our direction. You know, the entry here that Jen pointed out was pretty nice. I'm curious to know what model you used, Jen, for your entry tactic. Did you just use the change in state of delivery here? Again, I mentioned that as well. If it's going to keep going, if it gets above that, could use that as a change in state, which it did. I'm curious to know if you took that one. Jen said same. Yeah, I'm glad to know that most of you guys, well, pretty much all of you that spend time with me every week, have been making a lot of progress. Just on YouTube, right? Jen's part of my private group. Sean's now part of my private group. Both started on YouTube. Maddie's been with me for about 3 years. The other Maddie, both Maddies have been with me for a little, I think over a year. Let me see who else is on. Byron, did you take any buys, yo? I'm not sure if Byron's still here. Oh, Tony. What's up, Tony? July is going to be my month. Yeah, no more breaking rules at all. Don't break your rules. Make it a challenge for yourself. Yo, Byron, you catch these buys, bro? Like, buys look pretty damn nice. See, Fritz has started building my buffer, passing a challenge. Up 1.5 for the week. Yeah, I would end it there, bro. I wouldn't even risk it. If you're up 1.5 for the week, think about it. If you can make 1.5% per week, that is spectacular. That's like, what, 1, 3, that's 6% in a month. That doubles your income or doubles your account value every year if you can get 6% a month. And you could imagine doing that for years. The compound is insane. Oh, nice. Yeah. Byron caught a 30 bag. Maddie said, no shot. He took buys. He's the short king, yo. Like, he be snatching them shorts up. But yeah, if y'all can aim for reasonable goals, like 1.5% per week, or 2% if you can, if it's reasonable, while not pushing too aggressively, give yourself 1 to 2 trades a week, or 1 to 2 trades a day, if necessary. Right? And I'm telling you, you could change your whole life. Sean said that's why it was only 30 and now I took today the immediate rebalance. Nice. And the second retrace into the Vega change state. Okay. Yeah, that's dope. Nice. Perfectly in line. I love it. Love to see it, Jen. Yeah. The immediate rebalance was just a little too close to the open. You know, sometimes rules hurt. You know, you guys don't have to follow every rule that I implement into my own trading. You guys got to, you know, make sure you are your own trader. Let me see. I would never thought the rebalance there, so that was fire. We'll watch this again. Yeah, perfect. Yeah, you should. Let me know if you have any questions too, Jen. You know I'm always here to help. Let's see, Fritz said I had 2 trades yesterday for 1.5%. My target per month is 6%. Yeah, beautiful. Yeah, keep it there. And if you find that's a little bit hard to reach for, try for 3% a month. Right, that's still good. You know, you won't double your account every year, but you'll still have growth. Because the point is profitability. Once you get to profitability, you can scale it. But you have to know that you can get there first. Most people aren't even making 1% in a year. They're negative or break even. So if you can make 3% a month for the whole entire year, that's Warren Buffett level returns per year, right? 3 times 12. It's over Warren Buffett returns. So that's still reasonable. You know, don't let the culture of doubling your account and I'm going to flip this account and all this crap, don't let that be your reality. Okay? Because that's not the reality of trading. Those people go in there when they do those things, all those challenges on YouTube and whatnot, all those people that do that stuff, they go in there swinging for the fences. Most of the time, it's not real accounts, right? Some of them they are, you know, they're being real, but, you know, they also have other things that they're doing. So they're not making money solely on their trading. So they're able to, you know, kind of risk it a little bit and be that persona on social media. But, you know, very impressionable minds when you guys first start trading. You know, it's a blessing to find a community like this. I wish I didn't get tossed into the environment that I was tossed in when I first started trading, but it showed me quickly the damage that is caused by people that really don't know what the hell's going on. And it showed me that there's a lot of people that really don't know what the hell's going on, right? And then Byron showed me about ICT, and the rest was history, right? And nothing is like this stuff. And again, you set small goals at first, but eventually, you know, just remember that those small goals are not where you're going to live forever. Even if it is where you live forever, there's still nothing wrong with like 3%, 3% a month or 6%, right? There's really nothing wrong with that. But just know that you won't always have to live there if you get comfortable enough where you could scale. And instead of using micro contracts, you're able to use a normal mini contract. The game changes at that point in terms of how big things are. But you don't want to over risk and over leverage because of that. You want to live in a place where you're comfortable. If you can't go over 2 micro contracts because 3 or 4 or 5 it encourages emotion and really stirs you up, you're not at the point in which you're ready to get to those bigger numbers. You got to work your way up to that, and it takes time. You can't just go in and start to automatically, you know, once you become somewhat profitable, go in there and just automatically go straight to minis because you've shown some profitability. That's how you screw yourself up. That's how you erase progress, at least psychologically and financially. Okay, so you don't want to do that. You want to slowly grow. If you're good with 1 micro, you go to 2. Then you get comfortable with 2 for like a couple months, maybe 6 months preferably, and then go to 3. And then from 3, you can go to 4, right? And so on and so forth until you get to 10. And once you get to 10 micro contracts, you could then move up to a mini if you want. But honestly, I think it's just more dynamic to trade micros because you could trade 10 micros and have 9 different levels where you could take partials. Or, you know, however you want to break it down, right? You have 10 micro contracts. You could take half off at your first target and then the other half off, you know, in the next. Or You know, you could take 3 contracts off at your first target, 3 contracts off at your next target, and then just keep doing that up to 10, right? Until it's completely taken off. You can also pyramid, right? When you have like that 3 to 6% mastered and you're starting to become very, very good at finding continuations, but you're good also at finding your initial move, you'll be able to start to, you know, add more to your winners. All right, you could put like 2 or 3 down here, and then you could do like maybe 1 up here, right? If you have bigger contracts to start, say you have 5 contracts to start, you could do 3 here extra, and then another 2 up here, and then wherever your target's at, you could take profit, you know, along the way, and then you could increase that size. So you may have started with 5, but you're going to end with like 10 contracts. You know, and that's when things start to really accelerate. That's like competition level type of scaling. It's maximizing your winners, but you never add to losers. If you're in drawdown, you never add. And again, you still only have 1 to 2 trade setups a day. Those 1 to 2 trade setups can also have a mixture of pyramided entries. So if you want to take more trades, you know, make sure that first of all, the trade is profitable and it makes sense, right? Where it's going and you're confident in it. But in that one trade, you can have 5 or 6 different entries. Maybe you just want 1 or 2 extra. It may have like, you know, 3 entries in one setup, but that's still classified, at least in my opinion, as one trade setup. You're just pyramiding, you're scaling, making it bigger. And there's a logic, right? There's a tactic and strategy in how to do that correctly. Part of that has to do with the gripping point verbiage that ICT uses, that I've kind of mentioned a good amount of times. When price is moving in your direction, any place that would hypothetically be looked at as a gripping point, if you can mesh that gripping point area, right, or it's like an inversion PD array or some other PD array that you'll be able to hold, maybe it's a balanced price range that forms, right? If you're able to identify those after you've solidified that one entry that you're trying to master, you could then, instead of looking at those as supportive ideas, supportive areas for your overall direction and trade setup, you can start to look at it instead as an entry. So each one of these levels in here that we've outlined could also be looked at as an entry for continuation or pyramiding. And I'm telling you, once you get that first milestone, once you get that, you know, 3 to 6% a month nailed down, and you're consistent, and you know you're not over trading and over leveraging, you know, these are things that you can look to accomplish slowly but surely. And before you know it, you're able to find quality setups that you like. You're able to then scale into them. Psychologically know as well that you're not going to blow your account ever, and you should never be worried because you're not going to overtrade and over leverage. And then you can maximize this skill set over time. But all this, you can't just jump into these perspectives. You just can't do it, you know, because you can't jump in just because, you know, you feel like it, because first of all, you got to gain the experience. You have to master these, you know, little foundational pieces. You have to know where price is going to go. Your number 1 objective and number 2 objective. How am I going to manage risk? Where is price going to go? And why? Both of those, I give you very clear ideas around. ICT teaches that stuff as well, very clearly. But many people, do you notice that I didn't mention, hey, let's talk about the trade setup? That where are we going to enter? That's very subjective, but it's the easiest part. Once you have where price is going to go and master managing risk. Because if you don't master managing risk and where price is going to go, where you enter, it doesn't matter. Okay, it's going to fail because you don't know what the hell you're doing. So that's why every Sunday I do what I do. And, you know, this is why I teach with what I teach with, right? I focus on very particular things, and for good reason, with the objective of getting you to understand those things, right? Where's price going to go, managing risk, and then everything else comes after. Like I just talked about pyramiding and the perspective around adding to a position, using the gripping points, the other ideas or PD arrays that are in close proximity on the way to your initial target. All those levels that either invert or are in itself PD arrays, like bullish order blocks, bullish fair value gaps, balanced price ranges, right? Which is, again, pretty much an order block. When it forms and trades through it, it should not come back. Right? See something real quick. So yeah, we're inside this macro, so yeah, let me see something real quick. So yeah, we got dollar declining, so I think that we'll see one more leg up. So I am very curious to see if we can get this to send price up one more time. It's a pretty large range. How many points is that? Like 300 points? 500 points? 450? Close to it. So we got that bullish order block there. I definitely like that. So yeah, you guys got any questions? All this stuff is very, very important. Hopefully you guys got value from today. Again, don't forget to like the video if you guys haven't already. Really helps the channel out. Byron said, taking partials period is the best part. Yeah, exactly. That's literally the sole reason I use them. Especially because I'm a more conservative trader. I'm not super aggressive, especially around times like this. Sometimes I'm aggressive, but I say 90% of the time I'm very, very calculated. Very, very income based. I don't care about a Lambo. I care about paying my bills without needing a job. Right? That's the only thing I care about. And building wealth, slowly but surely. So that keeps me away from really being worried about trying to do too much. Of course, that'd be great to pull up in a Lambo. That'd be fantastic. But honestly, I don't think I'm even really willing to pay $1,200 for a damn oil change. Honestly, probably like $10K per tire. I mean, I got other things I could be doing. I could be investing in an account for my daughter. Make sure that she's a millionaire too before she's 21. I think that is a lot bigger of a flex than a Lambo, at least to me. Or just simply not needing a job. Like that's a huge flex too. Not that there's anything inherently wrong with the job. You can have jobs for cheaper insurance. You can have, all that type of stuff. Those are really, really good things to do. But there's better things to think about in terms of like Lambos. They're great. You can go lease one, drive it around, so you don't have to really be responsible for the maintenance. I might end up doing that, actually. It sounds like a good idea. It's like $600 or $700, maybe even $1,000 a month. Just lease the Lambo and then give it back to them so they have to pay for all the fucking maintenance, which is absolutely insanely ridiculous. So yeah, we may look to try to wipe some of this out. It may look to try to hang around this because, again, it is the end of the month. They've had this huge displacement. We've created a large wick. So I would not be surprised if this is really all we get. But with dollar being so aggressive, I would not put it past them that they are trying to smash. Clearly they're looking to take this low out. Go to the DXY. We're going to take that low out. This should result in at least one more turnaround. This should be a failed market maker sell model, unless the DXY was to accelerate aggressively back to the upside. We could very, very easily see this just be a retracement to then go higher. But you have your perspective was shorts. There's no no real 2022 model in here. But we did get a shift below these lows. Return back, respected, broke down below this. Traded this as a mitigation block. High, low, failure swing. Mitigation block. Reaching for the lows here. Everybody's stop loss is resting there. Remember this little gap in here that I highlighted for you? Wouldn't it be ironic that they go right down to that target? It's, a little bit sketch because we're trading into an inversion fair value gap that just got traded through on the daily. But nonetheless, if it tags that, that's great. If this ends up below this low, this becomes accumulation turn distribution, and then we'll look to target the lows down there. But yeah, I don't think price is going to really want to do that. And this has been a pretty rapid run. Just right out the gate, we went up, dropped aggressively, hit this lower portion here, respected the upper portion of this. Is it an order block? Can't remember what it was. Whoops. What was that? Oh, yep. It was a bullish order block there. Tap the upper 75%. Change state of delivery there. Consecutive down candles. So yeah, now we got another change in state. Look, you see the up candle here, multiple down candles. Once it breaks above it, that's a change in state. We got the up candle, multiple down candles, another change in state. You see how that's the same pattern right there? Both of which have led to price giving a pretty sizable run, continuing to the buy side. That's a signature right there that'll start to pop out to you. A stutter candle, and then consecutive down candles. Or if it's going to the upside, you have a stutter to the downside and multiple up candles. That then violates that open price and the stutter candle itself. That's a very interesting signature to identify changes in state of delivery. So yeah, we're still hovering around this up here. It seems like it's just banging around in here. Again, oh wow, I pointed this out the other day. This regular trading hours gap. I don't know why I didn't mention that. Really identify that this morning. Let's focus on other things. But yeah, this is what it's reached for. Look, right to the midpoint of the regular trading hours gap. I believe it's from the 15th, 25th. Oh wait, 23rd. So this is from the 23rd. It left that available up there. Today we've just absolutely ripped right into it. I talked about the likelihood and the risk of these inefficiencies up here becoming something that they want to reach into. Whoops. Ironically, they've come up into those levels. Not only this one, when it first started out, we talked about that, the initial start of the run. Then we said if it gets above that, it should be able to get up into here. If it gets above here, it may look to come up into here. So it looks like, even though that daily fair value gap was in there, which is what had me a little skeptical, just because we could very easily hit this and just go lower. But that clearly favored inefficiency. So all of that's inefficient. So it didn't allow for it to want to continue going lower because they had to come back up and clean that up. With dollar being bearish, if that continues, again, this will just be a market maker buy model. We do have the low here up to that high. We can get some of those measurements. So we're going to drop down a little bit. Just got the 50% in there of that regular trading hours gap. So we got the 25% of that gap right there. Ironically, that held up, rallied up, hit the midpoint, came back down. We have a breaker here. And then we talked about this breaker here when it got above it, should offer a run higher, which it did. Immediate rebalance, all the things we talked about today. Now we can see the price is now slightly only inefficient when it comes to this regular trading hours gap up to this point. So what I'm going to do to try to help clean this up a little bit. Bring that over there. Okay. Now when we zoom in, we see that stop runs happen here. I'd like to move up and see, is there any inversion fair value gaps we could use in conjunction with these levels here? So yeah, we're going into the lunch hour, so I'm kind of curious. It looks like they're going to want to, if the dollar keeps going lower. We've just closed, well, on this next hourly candle here. Let's see on the hourly. Yeah, that hourly is starting to close outside of that fair value gap. So we'll see if it can continue to march lower. I really don't like how the yields are running up and the looming potential for a rate cut. But for now, clearly everything is looking to pump lower in the dollar, higher in the indices. I mean, that's a shit show. Look at that. Ugh, the Dow, man, that thing's been vicious today. So yeah, unless something dramatic happens where this thing just tanks aggressively, we should still be able to see potentially one more leg higher. Whether they do it right now or later in the PM session, obviously that's something that, you know, has to be thought of as a risk. You know, it looks like, you know, we may have a chance to get it to go one more time in here for New York. So is there any SMT in here? I mean, I guess there's SMT there with this. So yeah, I'm curious to see if we can't get this thing to move. Got that little stutter candle in there. This right here will be our change in state of delivery. So now that we're above this, we should see immediate feedback. If not, if this breaks down below this, that puts this low in jeopardy. So let's see what happens with this. We took these stops. We're at the upper part of the daily inversion fair value gap. This area in here may be utilized to get us up here to clean out the rest of this inefficiency up there. I would like to see that if we can get it. But yeah, let's see what happens. It's a pretty solid closure below that low. Created a potential rejection block here too. This little red box that you see, that's a new day opening gap from, you know, some recent day. Okay, and shorts took a 43-point short, posted in Discord. Let's go see what you did. We've had a lot of really good things happening recently. Sean, great job. Yet another banger. Love it. Beautiful. By the way, Sean, you can change this to something that you want. It doesn't have to be that. You can obviously leave it if you want. That's beautiful. Look at that. Beautiful setup. Didn't quite get your reversal right at 7 a.m., but still caught a short-term retracement. 43 points seems good to me. All you got to do is live there, and everything that you'll ever want to achieve can be possible. There's Byron. Like the savage that he is. Beautiful. On the 5-second chart, you see that? That's gangster. Can't say I'm surprised. Yeah, there's just so many rising students. Volume profile. What the hell? I mean, I guess. So yeah, let's watch this right here. Keep your eyes on that. If this is going to go higher, it's going to do it from here. We're still inside the macro. Still got dollar going lower. So yeah, something that you want to keep tabs on too, right? This lower to go higher. If it's a buy model, if it is going to go higher, it should treat this accumulation as support. Mind you, this whole potential framework is at the high of a daily fair value gap. We just took stops. We do got relative equal lows here that could be somewhat of a risk with the little gap in there that's inefficient. And we've been really bullish, right? So they may not want to give us that follow through until later on. We're getting close to the lunch hour. So we're going to have to be cautious in regards to that. Because it may just chop around and then look to try to blow out some of the AM session liquidity. But I think that by the end of the day, we could end up getting us up to here. But we'll see what happens. Got all the indices pretty aggressive right now. Got the dollar pretty weak right now. So the Nasdaq is a strength holder. So we'll see if that continues. Yeah, it's already 8 o'clock. I guess we'll call it a day here. Appreciate you guys for hopping on. Hopefully you guys learned a lot today. Yeah, don't forget to like the video, subscribe to the channel. Let me know if you guys need any help with anything, and I'll be more than happy to help. But yeah, hopefully you guys got value. So yeah, with that being said, God bless y'all. I'm proud of all of y'all that did very well this morning, and let's keep this momentum going into this new month. Okay. All right. God bless y'all. Talk to y'all in the next one. We'll be live again on Sunday, and those of you in my private group, I will see you beautiful people tomorrow. Okay. Have a good rest of your day, you guys.